Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jairam Krishnamurthy, your morning brew of global financial updates. As folks, USD INR traded in a range primarily last week with slight hint on the weaker side, but it was the global markets with a wide set of updates. Sovereign ratings for the US were downgraded by Moody's, and the Japanese economy shrank in the March quarter. Even the ECB chief states recent rise in euro is partially due to the erratic policies by the US, but an opportunity for euro. So, JK, what is your thought on such updates and how do we see the markets?
Good morning, Shikhar. Yes, weekend headline was all Moody's action on the US rating. Uh, but I mean, it's good that it happened on a weekend because we didn't have to face some near-term volatility. But now it's by and large digested. At least according to me, that it is not anything that creates a big movement immediately. It first of all, it is the third agency to bring down the rating to AA1, and we already had S&P and Fitch do that. And the factors behind what they have done is also something that the market already knows, and market has been selling dollars and dollar sets based on that already. Therefore, there is going to be no new big reaction to this event. But yes, it's a reaffirmation of what is already known. And people, of course, even earlier there used to be some internal rules among the funds and investors, large investors, that they have to invest only in AAA rated securities and all that. But now that regulation is also not there with most of the investors, and they are I mean, they are eligible to invest in any top rated in securities and investment. So not seeing any immediate impact either on the dollar or on the stock market also, barring some small knee-jerk reactions. Yields, in any case, they were already going up. In fact, there was a reason, even without Moody's, on Friday when the Michigan, the report, preliminary consumer sentiment report came. It showed inflation expectations for both the 1 year and 5 year jump big time, and this actually led to the yields already going up in US time. So that was already a trend that is existing, and that is not taking anything from the Moody's action or anything. So at the same time, the consumer sentiment also fell. So that this adds to a list of weak data numbers from US last week, including the retail sales and then the CPI, PPI. So we have a situation in US where uh, consumer inflation expectations are going up. Fed is not sure what impact the tariff will have on the inflation in medium term. They are still watching the data, and the trade negotiations are still going on. Therefore, we do not know where the tariffs will settle also. And at the same time, economy is definitely showing signs of weakening in many areas. So that conundrum of where the policy is headed is still on. Therefore, market will be unsure about the rates and how to position themselves for the dollar. So I think we have already had a big move in the dollar in the last few months. Particularly since January this year, when the new administration took over, and so therefore it's a period of consolidation. What I'm seeing is also that this, even the safe havens have not made very big gains, including the gold. Gold, of course, did have a bigger jump than many other currencies, but that, I think, at 32.50, even the gold is facing some resistance. And therefore, I don't, the even the safe havens, including yen, may not gain too much immediately. But yes, there are things that are other than these US economy that we are looking forward to. Like, we will be having a summit between UK and EU for the first time on the after the Brexit. And there are chances that there can be some relaxation on many things that that restricted free movement of people from EU to Europe. So there is some chance EU to UK. So that there is some chance that that there will be some wider agreement and better mutual relation between Europe and Europe and UK that will emerge from these talks. That's something that the market is looking forward to. There's another news where a couple of Trump statements which are actually market will be looking at. One is on the fact that he was calling upon retail giants like Walmart to absorb the impact of higher tariffs and not to pass it on to the customers. So that's not a very good news from the corporate point of view because their profit margins are going to be eroded. And he's trying to actually mitigate the inflationary impact of the tariffs. And I don't know how far this will work. That's one thing that we have seen. And then there was a renewed attack on the Fed indirectly when he said the Fed is not lowering rates when everybody is lowering, and then he's very negative about the Fed approaching the whole scenario. So I think these are something that the market will be looking more closely at on these points rather than other weekend events also. Yes, so dollar continues to be in a range, and yields is something that I'll be looking at more closely. If there is a lesser participation from the investors into the bond market, then yields can rise beyond 5 for 30-year and beyond 4.5 for a 10-year. These can result in some sort of tensions in the financial market, can have a ripple effect on other markets like stock market and the dollar as well. Yeah, we are on the watch out of any actions in the bond market rather than any other segments because dollar is already a bit oversold and it is consolidating. And the stock market, of course, is still continuing to, the rise after the April 9th, the relaxation of 90-day pause on tariff has actually boosted the US stocks. In fact, Nasdaq is up 30% from the bottom that was seen before April 9. And so these are big positives that the market is. So if you're making still good money out of the US stocks, there may still be renewed investments into the US stocks, at least in the near term. So that is something that we are looking at. As far as the rupee is concerned, again, the same, we are dictated by flows right now, import buying, oil buying, defense related, some bit of repatriation on the FDI side. All these things are actually right now dominating, and the supply is somewhat muted. So we are seeing quite keen buying on the dips. Upside is capped around 85, 70, 80 because of some technical resistance as well as hesitancy to buy at higher level. But if there is any large outflow on a single day, that can break also, which can bring in 86 plus into the limelight. But I don't see dollar rupee going too far from those levels. So near term, dollar rupee also seems supported for its own factors, nothing from global. And we should eventually, when the dollar falls, maybe after a few weeks or maybe a month or two, then I think dollar rupee will also participate on the downside. Right now, we are in a consolidation mode. Thank you.
Okay, JK, that was really good. And yes, folks, for USD INR, it is the flows which are still dictating a lot of the action. And although we have seen a lot of movement on the purchase side by the importers, but the movement is capped around 85, 70, 85, 80 kind of levels. On the global front, the rating downgrade, as JK mentioned, has been making the headlines over the weekend, but it's not really a major event for the reaction in the short term. Although it can definitely be a reaffirmation on the underlying US security performance concerns. So that's one of the key things, because Moody's is not the first one to get into this sort of a downgrade. It's after the rest of the agencies. On the fundamentals front, the consumer inflation expectations continue to go on the higher side, and the rest of the indicators continue to push for a softer release, while the trade related uncertainties continue to stay in the front, even though there have been consistent updates on the positive conclusion for the trade. So these are the kind of set of uncertain updates on the US economy, which may keep the US dollar on the consolidating front instead of having any sort of a significant trend in the immediate offing, but eventually trends can emerge for the medium to longer tenor. On these updates also was the move for gold, which moved higher in the recent trading events or the recent trading sessions. Although the correction of the uptrend doesn't look like complete, and we can have another round of corrective moves before another round of rally. One quite interesting update JK mentioned was the fact that Trump has asked the corporates to absorb the tariff impact and not passing it on to the consumers. Now, these set of updates will keenly be watched by the market participants to see how does the tariff impact actually come, and where does the tariff impact actually come. So these are the kind of things we'll be keenly watching out for, and we'll be bringing you all sorts of updates on the regular basis. That's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening in.